Alrighty, welcome everybody to today's training. Today we will be covering volume. Volume is literally my favorite indicator. If I only had one indicator to choose and not use anything else, it would literally only be volume. It is phenomenal. It is the gas behind the movements in the market. I want you guys to literally think about volume as the gas, the accelerator. When you get into a car and you want your car to move, you press the gas pedal. Now, as you guys know, if your car is moving and you stop pressing the gas pedal, you begin to slow down, right? If you even put your car in neutral and there's a hill, your car can potentially move, but not with any real force or speed. Force and speed is put when you put the gas and you accelerate your car. That is the same thing with volume. Volume allows you to see the true intent behind the market. There's various ways to look at volume. We're gonna go over some of those today, but I want you guys just to understand conceptually that is what volume is. Candles can lie to you all day, but volume really tells you exactly. And the true definition of volume is simply how many shares were bought of any given asset. So when we look at this volume bar, right? Like 2.4K. Now that could be a metric broken down, meaning 2.4 million, meaning 2.4 thousand, meaning 2.4 whatever. But this is the unit of measurement of how we measure how much volume, meaning how many buyers or sellers enter the market on any particular time. Now, one thing I will say is not color coded, meaning just because you see a red candle means selling volume came in. No, that is not the case. That just means there's a lot of participants that enter the market either for the buy or for the sell at during on that candle. Now, of course, you're able to see what the true intent or direction of that candle is or that volume is by the candle pattern. So when you look at an engulfing pattern with a lot of volume, right, that helps you understand that, okay, a lot of buyers came in. You know, a lot of them came in because of the volume, and you know that it's buyers because of the candle, right? That is the relationship of how they work together. So let's go ahead and go into it. I'm gonna go over two levels I can say about analyzing volume. Um, Number one is the most basic way to utilize volume, to look at volume, and I feel like this is something that you can implement tomorrow without practicing or studying or any large work being really done. Is really a plug and play concept. The first concept I'm going to give you guys, and the second concept I'm going to give you guys is a more analytical approach, right? That I also think you can plug and play, but will take a little experience, a little time, and a little adjusting to get used to. But they're all fire. So let's go ahead and get right into it. So first things first, you are going to need to add the volume indicator. All you do is come to indicators. You simply type in volume. That is the volume indicator. You press, click on it. It adds to your chart, and now you have volume, right? So this is what your volume indicator looks. This thing right here on the bottom side. So if you wanted to edit it, we turn on my indicators. You can go ahead and click, hover over it, and hit settings, or you could just double tap one of the candles, and it'll take you to the settings. Now your input for your MA length is 20. It's standard. There's nothing you have to change here, guys. I changed like your volume might look a little different. I changed it to the step line instead of the line, just because I wanted it to be easier to like say decisively whether the market is above the MA or not. Like for example, there's certain candles like this is kind of an example where it's not a perfect example, but kind of example where, because of the slope of the line, because the line is sloped like this, a part of the candle's peeking out and a part of the candle's not. Kind of like you're wearing your hat sideways. That's why I changed this to a step line because it allows each line to be straight. So I can see without a shadow of a doubt that yes, this is above, even if it's slightly, I can see without a shadow of a doubt that it's above and that line isn't sloped. That's the simple reason why I use the step line. So let's go and get right into it. So real simple concept. If the volume bar closes above the black line, there is volume. There's high volume. If the volume bar is below the black line, lower volume. It's literally that simple. So the first way I want you guys to plug and play this is in accordance to your entries. When you're looking at an entry, this is a confirmation of your entries. So let's say you want to get into a trade. I'm not going to go over any specific strategy today because it doesn't matter the strategy you're using. But let's just say you identified a key level. You identified a key level, and the market is approaching your key level, and you see an engulfing pattern right here. You want to ensure that your volume bar is above that black line. It's really that on that engulfing, that exact engulfing, you want to ensure that it's below the black line. And I can just show you guys a couple examples of that. Now, this is an easy one. It's probably 9:30 candle. Okay, 8:30 candle. But as you guys can see, right, I'm just gonna put a vertical line on this engulfing, and you see the volume behind it was high. I don't know if that's the most effective way to do it. Let me see if I can make this line thinner. Okay, cool. Dashed line. Perfect. Because I want you guys to really be able to see um and change the opacity. I want you guys to really be able to see the volume in accordance. So you can see the volume was high on this candle when you got this engulfing. Let me see if I can spot any other examples where you get some engulfings or some pin bars. And of course, you want to go in the direction of the trend um, whenever you're trading. But ultimately, like I said, that's pretty much what you're doing. This is another example right here. Put this vertical line. And this is another thing that I love, right? You know, a lot of times when we speak about in pin bars, right? I need my pin bars to be bigger than the previous candles, but notice this pin bar here is smaller. It's smaller than the previous candles. Notice how you have this big black candle, right? You have a big black candle. You have a lot of selling volume coming down, right? But as the market is pushing and it comes to this pin bar, notice this pin bar's volume is more than the volume of any of the previous candles. Not only is it above the black line, but it's bigger than the previous candles. This is the things I want you guys to peep. So even though it's a baby pin bar, that pin bar brought a big move because a lot of people entered the market. More people entered the market here than the in the last like I don't know like 10 candles. All right. So seeing that high volume allows you to confirm and know that okay, it's a big push coming. Right? It's a big push coming. Let me see. Let's find one more example for you guys. And literally, that's pretty much all we're really doing when it comes to confirming our plays. Like, so for example, if we look at some of the actual entries that we took as a team, right? We can go to M5 when we caught that on Friday, yesterday, actually, you know, I called out that ESL. This thing did so much dancing and eventually sold for us. So our stop loss was right here. Thank God we were just lucky enough that we put it right there. 'Cause sometimes I put it really, really close, but we literally landed by a hair. But ultimately, looking at this and this engulfing, right? Although it did a lot of chopping around, the sell eventually came, right? And if we look at the volume, sorry, this was the entry actually. This was the entry, not this, because this is the one with the volume. So when I got this entry with volume, this is the one that I entered. And as you guys can see, we got a pretty good drop off rip. I started to play inbounds. But like I said, all of these, and if you're looking at all of these engulfings, all these pin bars, they're all under volume, right? So none of these would have really been valid for me um, until this. So notice this red candle. I'm just going to put a vertical line, right? That red candle is above my black line. Let's go look at what candle that is. That's this engulfing off the zone. This engulfing off the zone would have also been able to be a decent, you know, entry for you. Market came back to the zone again. Let's go see if we got another engulfing. And for me, this passes the line. You see how this is right on the line? It's not below. That's a pass for me, right? That's a pass for me. I just want to make sure the market has enough volume to bring a real push. So all of these are volume entries. That one, that one, that one. These are all volume engulfing entries. And these all would have got you paid. And now, granted, it's a Friday, and those the choppy ass Friday, but they all would have got you paid, right? You can look right here. Again, same thing. Just allowing yourself to confirm your trades with volume will do a whole lot for you. Let me see if I can find some examples of some entries that didn't have volume and kind of just see how it went. And you're gonna have some of those sometimes, right? So, for example, you're gonna have an engulfing like this that didn't have any volume. It didn't have any volume and you know you're gonna sometimes miss out on entries because there's no volume. I'm gonna show you guys how to still be able to catch those if the volume is not high right then and there. But one other thing I want to show you guys is another thing that volume can do, which is not only confirm entries but also breakouts, right? When you see the market break out of a level, and you're like, okay, is this a true breakout or is this a false breakout? You would know that based off volume. And if you want to trade breakouts, you absolutely could trade breakouts. And I absolutely trade breakouts sometimes if there is good volume. So notice this candle right here. And for all my breakout traders, this is literally the solution to your problems. So this candle right here broke out. This is the candle that broke out and closed below. And notice that this same candle, oops, uh, oh my goodness. What is it? OV? There we go. Sorry. This same candle has good volume, right? So now if you wanted to enter for shorts and put your stop loss in you, for me, if I'm gonna enter off a breakout, I'm putting my stop loss above the candle that broke. I'm not, I don't need a huge stop loss. This still would have allowed you, right, to make good plays and make good money with the breakout. So if you're wondering, okay, is this really a breakout or not? You know that based off of the volume. And sometimes you have low volume situations where it's like, oh, well, okay, that's not really a breakout. Let me stay away from that. That is absolutely something you want to do. So we understand that volume is simply a confirmation of should I do this or should I not do this on the basic level. Now let's get to step two. Let's make it more advanced. It's another example of good volume on a breakout, and you could have caught that sell. It would have been a pretty decent trade. And then also, if you wanted to cast a breakout, let's say you picked any one of these levels, and you wanted to cast a breakout, and you want to see, okay, what candle broke out? Okay, this candle broke out. Is there volume behind it? Yes, there's volume behind it. You could have entered for buys and held it the entire way. All right, so that's one thing you have to understand. Before I get into the advanced, I wouldn't even say advanced, but just step two version of volume, or a deeper look into volume. I want to give you guys a quick nuance. So let me turn on my session indicator so you guys can see what I'm talking about. Understand you need so when you're talking about indicators, you want to understand the strengths in indicators, but you also want to understand their flaws. Same thing when I talk about with moving averages. Moving averages are great to know the trend, but if you're in consolidation, the moving average will fucking kill you. So volume is phenomenal. It tells you the true intent. However, volume is often slightly skewed. How's it slightly skewed? Because of the 9:30 bell. So if I turn on my sessions indicator so we can see the different sessions in the market, every day at 9:30 you're going to have above normal volume. Every day at 9:30 you're going to have above normal volume. And because of that, you're going to get to a session, you're going to get to a time in the session where everything, even if it's a good move of intent, will be below average volume because the average is so high because of this one anomaly. I want you guys to understand that and understand what that does. It makes so because 9:30 was so strong, it makes everything else look weaker, essentially. All right. So keep that in mind. And like I said, I'm going to show you guys a way to still be able to take full advantage of volume um regardless, so that that 9:30 is not too much of a hindrance. But I want you guys to understand that there's certain trades that you're going to have to let leave. If you're going to choose to elect volume, you're going to have to let it leave. Now you can choose to, make, if there's strong volume, make that a full risk trade. And if it's not volume you want to see, but it's a great setup, you can do half risk trade. I totally understand that. I'm fine with that. But when we talk about your A plus best type setups, it's going to be the volume. It's going to be make sure volume's there. Okay, cool. So now let me know the nuance. Now that we understand the basic level of volume, let's go ahead and get deeper into it. So in a trend, there's three phases actually. You have the initial, we'll just start it like this. You have the initial breakout. So let's say we have a trend established. Trend is established. You have the initial breakout, which is when the market broke your level. We have, I low-key want to do it different. Doesn't really matter. We have the pullback, and we have the continuation. Now, I want you guys to understand how volume should be depending on these different phases. And like I said, the initial thing I talked about was just simple plug and play. If you're lazy, stop the video now, go home. What you watch will incredibly increase your accuracy. But this is where you become a real beast with volume. Think about it. Volume is when you're pressing the gas pedal. Volume is when you're sprinting, when you're adding force, when there's a lot of force behind the move. So where do you think you want to see volume in this trend? The initial breakout, you need volume. Guys, that's number one. In the breakout. So you look for a break and retest. The breakout needs to have volume. That's how you know it's real. That's how you know it's real. If the breakout has volume and especially has good standing volume for a couple candles, because as it begins to peak, it's kind of like a roller coaster, right? As you're going up, you want faster, 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 and you start to slow down as you get to the top, which is normal. It's like everything. As the volume comes down, it begins to slow down so it can turn around. So you need to see volume here. So I'm gonna shade this in red because I need this to be hot. I need from here, uh, need from here to here to be hot, red hot. Let me edit this real quick. Let's do that. Why is it doing that? I am trying to make my box smaller so it's not extending. Okay, trading view. Oh, okay, trading view is acting weird. It's not letting me edit it. I don't know why. It is what it is. I'm just circle it because I need you guys to visually see the difference. I need from here to here. I need this to be hot. I need somewhere in this region to be hot, especially this middle area where we actually had the breakout. I need that to have high volume. Now, the pullback, you want the volume to start to slightly subside during the pullback. So, meaning when the market pushed up, the buyers was pushing in, it was hot, and it begins to cool down as sellers come in or as buyers let go a bit as you pull back to your key level. Now, once you get to your key level, this is an A plus trade. Once you get to a key level, your engulfing or your pinball or your confirmation candle right here has higher volume than the pullback. So, meaning you had great volume, it subsided a little bit, slowed down a little bit, and then high volume right here at the edge to kick off the continuation. That's what you want to see. But now here's the nuance I want you guys to understand. There's certain times where, again, you will not see volume right here on that engulfing or that pin bar. You will not see volume right here. But because you have such great volume on the push, you know this is the continuation. It's just because there's not a lot of activity right here, but this is where buyers are gonna hold it strong. So again, high volume, volume slows down a bit. An A plus setup is high volume here again, and a B setup is no, same light volume, and it begins to pick up as the market pushes back up, right? So looking at that break before your entry is low key one of the most important things. So if you had high volume on the break and high volume on the entry, oh my God, it's a banger. If you have high volume on the break, no volume on the entry, it's a pretty decent trade. If you have no volume on the break, it's already a fluke. Low volume on the break. You may have volume on the entry. I ain't gonna lie, I take that. But low volume on the break, low volume on the entry, dead. Not jacking it. Not doing it. And let me show you guys exactly what I mean by volume on the break and then what happens on the retest. So let's check this out. The entry we took on Friday. When the market broke out of this zone, when we've seen the market zones created, the market came, broke out of it. Look at the volume. Look at the volume. Look at how the volume was strong this entire drop for multiple candles. It was strong this entire drop, right? And then as it began to pull back, it began to slow down. 9:30 came in. That's why the volume jumped up again, right? And then we began to pull back. So the initial pullback, these few candles, this initial pullback, as you can see, had some volume to it. You had this big white candle right here. And then as the market continued to pull back, Um, all right, cool. Fix my zone a little bit. As the market continued to pull back, right? As you can see, the volume is flat. It's very flat. The volume is flat. This is all the pullback. The volume is, it became smaller and then it got flat. This is the type of things you want to see. So there were strong sellers. And don't look at like the size, just because sometimes, like I said, during 9:30, volume is naturally going to be higher than during 5:30. So more so, I'm just looking at the volume in relation to the average volume at that time. So at this time, it had higher than average volume. We started to continue to drop, higher than average volume. We started to pull back. As the market pulled back, the volume subsided. And then notice this one red candle is higher than the previous candles. This one red candle was that entry that we were talking about. That's that engulfing. So I had strong volume on the break. Volume began to slow down on the pullback, and then strong volume on the entry. The gas is back on, right? We can look at I think what did we call the day before that? I think it was YM1, right? Yep, it was definitely YM1, right? Same bob, same thing. So boom, we know the trend. You see a level of structure. We see this level of structure here that the market established. This is, but sales that we called out for the camp. So we see this level that the market established. Market breaks level, it begins, and it started making lower highs and lower lows all the way from up here, to be honest, right? You start to see the lower highs and lower lows, and we get the break of structure. Let's analyze the market during this break of structure. When the market broke structure right here, notice we had volume on the break. That is what you want to see. That is exactly what you want to see. Now, this huge candle when the market pulled back to my zone is 9:30. That's why this is bigger than anything. That's why I said 9:30 is a nuance. 9:30 is a little thing that makes a perfect. This would have been overly perfect, but that 9:30 is the one little thing they throw in the water to just make the water a little messy. But you just have to understand and not really worry too much about it. So now we see higher than high volume on the break. Market pulls back. I don't get an engulfing. This is a doji. Don't get an engulfing. Okay, cool. Right? Market comes back to my zone and gives me an engulfing. This is what I want to see. I have volume on the break, volume on the entry. The engulfing is my confirmation. Higher than average volume during the break. Higher than average volume. This is the type of trade you really risk the whole full percent. You don't go half percent on shit like this. You go full percent, bro. You go full percent. This is how you also know like which plays are really A plus and which ones is like first off the strategy is fire. I know that. So it's like every trade off rip is going to be a good setup. But the ones that follow these specific parameters are great setups, are setups you can have ultimate confidence in, right? So this sell right here would have gave you a 1 to 4 easy smackers. And we took this trade, it went everybody ate, right? And that process simply continues. So now, um, let me see. And also knowing like if you should close or not. Like for example, when you got this engulfing here and it had low volume, you don't got to close. If you get an engulfing against you and the volume is low, like that kind of helps you understand the state of the trade. But ultimately, the most thing I'm focusing on volume for is like, is like the truth behind what's happening. So if I see a breakout, is it true? I look at the volume. If I see an engulfing, is it really true? I look at the volume. Another breaking retest that I took on Friday, right? Notice here, this is one of those examples where you didn't get volume on the entry, right? The entry engulfing did not give volume. This is lower than average volume right here, right? Because it is lower, is below the line. Why did I take this trade though? Because on the break, we were able to see volume, not all of them, right? But during the break, all right, that transition for the breakout, I see this candle that's above average above volume that's during this breakout. So I'm like, okay, cool. We still have volume during the break. We pull back. We don't quite have volume on the sellers, but guess what? This, even though it's not above average volume, it's higher than the previous candles. If I look at all during this pullback, look at all these white candles, all these blue volume bars are getting smaller and smaller and smaller. So when the buyers are in, when we have buy candles, the volume is getting smaller. When I finally got a selling engulfing, the volume got pretty bigger, right? This brought a beautiful sell. So understanding volume does everything for you, right? It helps you understand what is the true intent behind the breakout, what is the true intent behind the retest, right? Is this real? Is this move real? Or is it BS? And a lot of times, if there's no volume, you will get a lot of chop before, even if the move comes, you will get a lot of chop before the move even happens. And it's like, damn, I probably could have just avoided that, or I probably could have found a better entry for the play, right? So definitely want to utilize volume. Let me see if I can find you guys another example. Um, but in the meantime, is there any questions? Any questions on volume? Anything that you guys are not fully understanding, or you guys, maybe like a question mark in your head when looking at volume? Pretty simple topic, pretty simple, but very powerful. Very powerful. The most powerful, right? Looking at this zone right here, beautiful reversal. Market came back to, your key level, and just look at the volume. Look at the volume. Look at the volume compared to the previous candles. There's some shit I really want y'all to see. Look at the volume compared to the previous candles. You're at a key level with volume bigger than the previous candles. This is a literal sign that it's like you stomped, it's like the RPM when you stomp on your accelerator, when you stomp on the gas, you see the volume, right? It lets you understand and truly know the intent behind the move, right? So please ensure that there's something that you're utilizing, you're confirming with all your trades, regardless of the type of strategy you're using. It doesn't matter. You can be a breakout, you can be a trend line trader, right? Let's say you wanted to be a trend line trader and you was waiting for the breakout of the trend line. You can confirm it with volume. Whatever you do, I just believe that every trader should be using this in one way, shape, or form, and trying to confirm their trades with volume, right? And whether your strategy sucks or you get faked out, it doesn't really matter. But looking for that volume will help you understand exactly if like it's gonna help your accuracy, regardless if your strategy sucks or it's good, it's gonna help your accuracy. Now, I will say the only nuance you will have to start to get used to is certain times, like I said, there's gonna be low volume. There's only women on this call. I love y'all. Shout out to y'all. I just realized that. Wow. Oh no, I'm bugging. Okay, I'm bugging. Okay. I can only see the only names I see is okay, Aisha, Jasmine, Million, and Alyssa. So I thought, okay, I'm sorry. Take that back. I'm not sexist. Anyway. So, yeah, it doesn't matter if your strategy sucks, your strategy's fire, doesn't matter. It's gonna allow your accuracy to go through the roof. Like I said, the only nuance is there's certain times where the volume is gonna be low. It's gonna be lower. It's gonna be low because of that 930 candle. You may miss out on trades. And there's a lot of times, a lot of times where the entry is false and it's gonna hit stop loss, and that's why there's no volume. So for me, I would gladly watch a trade leave me because there's no volume. But like I said, if there's volume on the break, you can take. If there's volume on the entry, you definitely can take. Now, if there's volume on both, I don't want to say over leverage, but you know what to do. Bet that shit. You feel me? So that is pretty much it. Any final questions? Any final thoughts? If not, I think we good to go. I think we good to go. We had a flawless week this week in the markets, all thanks to volume. Every single trade that we took had volume. I forgot the first trade. I remember the Fridays, Wednesdays. What was Tuesday's trade? What was Tuesday's trade? Let me see. 1 second. That was Nas, March 3rd. Nas on March 3. This is easy. So I just seen another shut up. And again, volume. Volume. The volume is there. You got to break a retest. You see the volume, you take it. You see the volume, you take it. You don't think, you just take it. On the third, this was the third. What did we take on the third? We took a sell early morning. Tweaking? Hold on. Sorry. I mean, I'm trying to just show the setup that we took. Oh, yeah, it did hit break even. Okay, so I think we entered over here off this sell, and then it came here. gave the volume and golfing and hit break even. Makes sense. I know we took a sell on Tuesday. Definitely hit break even. But yeah, flawless week, phenomenal week. But like I said, all thanks to every single setup that we took this week. It's literally all volume. Oh, I actually called this right here. I didn't even know. We actually did call this buy on Wednesday. Okay, cool. Yeah, we had a phenomenal week, y'all. We had a phenomenal week. Cool. But yeah, y'all definitely go practice this. Definitely go just look at the relationship that the market is having and look at like how the market's moving and what the volume is doing. You start to understand that, especially like when you're in buys. I'm gonna leave you guys this one last tip. If you're in buys and the market is going well and there's still volume, so notice up until here, there's still volume. And from this moment, look, notice how all the volume bars was under the average. And notice how the market began to actually slow down. So that also helps you understand when to get out of your trade, right? You see volume begin to subside, you can start to taper off, all right? Or if you see an engulfing, a bearish engulfing with high volume going against you, it's definitely time to get up out of there, right? So a little shit like that just kind of helps you give some nuance in terms of like,
Nah, nah, not that, not like that, not like that. Baby, like I don't even know.
yeah, yeah, he's having a great time. Bro's having a blast. All right, cool. But like I said, if you're in the trade and there's still volume behind you on these buy candles and you're in a buy, hold that goddamn trade. The gas is still on. The volume goes down, it's time to start either taking some partials or getting up out of there. But that is pretty much it. If there's no questions, I'm gonna let you guys go. This video will be uploaded. Million, I'm sorry. I'm sorry. I know I told you I was going to send the video. I'm going to upload the video. I'm going to upload this video today on YouTube, and I'm going to upload the other video on YouTube today. The market structure video. I'm going to upload both of them on YouTube, and I'm going to upload the first T training on the course. If I don't upload all three of those videos by the end of this weekend, I'll do a raffle. I'll do a raffle for a 3 month subscription. Dead homies. Hold me to that. Hold me to that. All right, y'all. Enjoy the rest of your day. I'm gonna catch you guys on Tuesday live session. Catch you on Monday. Signals. Get this money. Let's have another phenomenal week.